Hi, welcome back to Stock Talk. So at the beginning of this show, I do these lessons at the beginning. So you want to make sure you know that if you have any thoughts or questions on what you'd like to see in that part of the show, please feel free to send it along. You can email me or just post it in the comment area. And if I feel like I'm really an expert on that area and it's something I incorporate on a regular basis, I'll definitely put it into the show and give it some time. So today I want to talk about momentum divergence. It's an often used phrase out there in technical analysis land. I think it's a little overused, and I'm not sure people really understand how it should be interpreted. So I'm going to go into sort of the standard way, and then I'm going to show you a way that I think is a little bit more advantageous in using momentum divergence. So let's go ahead and get into the agenda. And as I said, so momentum divergence, I'm going to focus just on, I'm going to give one example today of a stock, but there are a lot of stocks that have been doing this. And I think it's good to be able to go back and look at some of these examples and see if there's a real setup for you. And I think as you go through and look at what I'm looking at for momentum divergence, I think you'll find this can really add an edge for you for your entry pattern. So we're going to start with the typical momentum divergence. More like a counter trend play is where I see most people looking at divergence. And then I want to show you what I think is actually the best way to use momentum divergence. And I use it in multiple time frames. As always, I want to look at the higher time frame and then the lower time frame. I'll show you exactly how I would go about doing that. And then we're going to talk about your stock requests. So I'm going to go through and give some analysis on the stocks that were sent over. Before we get into that, my services can be found on rabilstockresearch.com. I go through thousands of charts on a regular basis, trying to identify some of the best looking patterns, looking for a time frame more like over the next 3 to 6 months, using multiple time frames. So anyway, if you go to the individual package on the services page and plug in Stock Talk, you can get the first 2 months for $50. Let's go straight into the analysis using momentum divergence. And so I've got 4 charts up, but I have a different look. In the upper left, I have the zigzag on the weekly along with an RSI 5. And I actually want to zero in on this for a second. So when we're talking about what I consider to be the divergence that's used a lot, it's when we see a stock moving up and people are evaluating whether the momentum is confirming. So it's a counter trend momentum confirmation. So when a price makes a higher high, does the momentum confirm? And I think this is a very valuable exercise when it comes to analyzing. I want to use this, and I use it on a regular basis for analyzing the trend and the strength of the trend. However, if I'm looking for a trade setup, and I want to use momentum divergence for trading, I'm going to show you a different way that I would use momentum divergence as opposed to playing it counter trend. So let's just look at this as an example. We're making a higher high here. You see how price made a high here and then another high here. And if you compare the RSI, it actually made a lower high. So we've got this divergence where price is doing one thing and the MACD, or I'm sorry, in this case, the 5 RSI is doing something different. And when we get this type of pattern in a trend that has a decent momentum characteristics based on the ATEX, for example, then all we're looking for is just a retracement. It's not necessarily a sign that we're going to get a big reversal. So I want you to start thinking in terms of if you're going to look for counter trend plays using momentum divergence, you got to be pretty quick, especially if the ATX is pretty strong. You might get these little pullbacks to either the 18 or the prior low. Those are the 2 target areas that I would be using for a divergence like this, where we get this little divergence in place in the trend. It's a part of the trend. It's going counter to the trend, basically. You're playing for a little dip. I wouldn't necessarily be looking for a big decline until I start to see deterioration in the ATX. Now, if we go and look at another example, I want to show you how I might use momentum divergence, I think, in a much more I think appropriate way, in a way that could be very, very useful in improving your timing and improve your risk reward in a trade. So I'm looking at this service now, and I've talked about this pattern over the last, really over the last month, where we're looking for a pullback on the monthly chart. Obviously a good trend in place, strong momentum conditions, but we get down to this 18-month line, and if we go and look at what's taken place on the weekly chart, we had a drop, and then a rally up, and then we made a lower low. So when I look at this, I've got this ABC decline, and when I can compare two bottoms like this, I want to go look at the indicators. The problem I've got, even though this is making a lower low, if you look at MACD, it's making a lower low as well. The problem with standard MACD, looking at the line, is that it's not sensitive enough to identify quick or shorter term momentum divergence like this. It's just not going to give you the type of signals you're looking for. But one thing I will tell you is we do have our zero line reversal developing, and we have low ATEX. So I've got that confirmation in this pattern showing that we ought to be on the lookout for signs of a reversal. But if I compare this low, this lower low here, notice what's taking place in the histogram. The histogram is actually making a higher low. So I'm getting this confirmation where, yes, I'm making a lower low in price, and on the histogram, I'm actually showing some signs that the momentum is improving a little bit. I think it's a lot more drastic when you go and look at the price, look at the price using a zigzag, which is clearly making a lower low, and then look at what RSI 5 is doing. So I can see this divergence much more clearly, and there are times where you're going to see this a lot more clearly using the RSI 5 than you would be using a MACD indicator. So I don't want to dismiss the RSI. I actually think RSI is best for momentum divergence signals. But what I wanted to point out is, so I've got this rising 18-month I'm pulling back to. I've got an ABC decline with a zero line reversal and low ATX. And now I have both histogram divergence and RSI 5 divergence. And so I can go at this point and start to zero in on this bar right in here and look for signs that things are turning up. I don't necessarily have to wait for a break of the downtrend line. If I want to be a little bit more aggressive, I can get an earlier signal here. The way to go about doing that is to go to the daily chart. Now, let's look at one more thing. I mean, last week I talked about an undercut and rally pattern. Look at how this undercut this low and then rallied back above and then came back and tested. And then I would say on this gap up day was really kind of the trigger to get you in. And look at how much earlier that is. If we look at the price, it's around 475 or something like that. That's very early on the weekly and really early on the monthly. You're getting in at a much earlier level using this divergence in 3 time frames. Because the divergence is actually taking place on the weekly chart, probably looking at the RSI 5, but I know I have the backdrop of a good trend on the higher time frame, and on the lower time frame is really where I'm getting improving signs with the undercut and rally and MACD improving. So these are the types of things that I would do to improve my timing if I want to be a little bit more aggressive and get a better entry. So there should be a couple more examples of this as we get into the analysis of the stocks, but let's go ahead and get into that right now. Okay, so the first stock we got here is SWCH, Switch Inc. Beautiful setup. If you look at the weekly chart, look at this breakout and pullback, and pulled right back to the breakout area around 20. Had improving momentum conditions, had a little pinch develop, nice DI lines on both the monthly and the weekly. The problem was we didn't get a trigger. The trigger was a big gap up and ended up gapping up over 25 and has really been pulling it back since then. So, if you happen to be in this prior to that gap up, then I would definitely stick around, probably have a stop underneath 20. But if you're looking for an entry, I would have to do it now off the daily chart. I don't really see an entry on the weekly. We're a little too far away. But we're getting into an area where on the daily, I could play this. And if I'm going to play it off the daily, meaning if I'm going to buy the pullback off the daily, then I have to manage it off the daily for now. So that's how I'd be looking at this one at this point. ATEX. So we're at a pretty interesting spot right now for this one. Actually pretty important, critical, because we tried to break out. And you can see this breakout, it tried to hold, and now it's sort of failing. So now we're sitting at a pretty key level here right at the 18-week. And I don't want to see this 18-week break. We've already gotten a MACD crossing over the signal line. At least it looks like that's what's going to happen this week. So we're showing a little bit of signs here of a potential sort of failed new high where we take out this high and then we can't hold it. And so we just need to be aware of that. And we've got the midpoint of this big green bar here. I turned it red, but that's a big green bar. So we're right about the midpoint of that is right about the 18. So we're at a really critical level here, right around 54, 54 and a half. Just something I think I would be watching pretty close. If it fails there, then I would pull this off of a watch list. I really wouldn't have much interest in it. And I would consider actually doing some selling if that breaks. BNTX, really big move. Let's look at the weekly chart. You can see how this started moving higher in a sequential wave type fashion where we're making higher highs and higher lows, pretty orderly. 18 and 40, we're moving up at about the same rate. And then we just started to accelerate. Now look at how much faster the 18 has been moving than the 40. Now they're both just accelerating at a pretty big rate, but there's some separation here and there's separation from price from the 18-week. And we get this big reversal bar last week. So those are signs of climatic activity that I think this is experienced. It's probably going to spend several months working off this overbought condition that's taken place. So I would not be in any big rush to be doing anything. I would consider maybe doing a little selling if I were long this stock on maybe another rally or something like that. If we got up closer to 400, that might be a pretty good opportunity because I do think this is going to take some time. Despite the fact that the momentum is good, I would not be, just based on how big a move it made recently, I would be more inclined to think it's going to take more time, several months. Let's look at CMI. So CMI is in the process of pulling back, and what I want you to start thinking about is when you're looking to be an investor or a trader, you want to be playing chess, okay? You want to be thinking in advance. You want to, a couple moves in advance, right? I mean, when you play chess, you're not just doing what you're doing right now, you're thinking in advance. And that's what I want you to do when you're thinking about stocks. And I like what's developing here. Now, I think it's early, but it's a stock that I know in the back of my mind, I'm looking for a few things to take place. We've got a zero line touch now. We've got low ATEX. The sellers really aren't that strong. The 18 is about to cross down through the 40 on the weekly chart. We're getting closer to the 18-month line. The momentum conditions are pretty good. We hit a peak of around 40 or something like that on the buy side on the way up. And on the way down, there really aren't that many sellers. So I'm inclined to want to watch this pretty close. It's probably going to take another 2 to 4 weeks to really get itself set up. But it's a one I would be in the back of my mind. I'm thinking ahead, and I'm like, okay, this is something I want to keep a close eye on. NLY. So this made a pretty strong move after the violent decline and has made a vertical move off the bottom. And now it looks like it's getting through this resistance area. So now we're coming back to test it. And I think this is pretty key. If we can hold, you see that low and that low, we got back above that. Now we're testing it. And a lot of times what was support becomes resistance, and now if it can become support again, I think that's pretty important for this trend. And I think that the odds are, if we hold this, that we start to work our way higher. We probably will see the MACD cross above the zero line on the monthly chart, and I would most likely be expecting a zero line reversal on the weekly. So it's another one I'd probably be watching, but it's at a really key level right now. CLF has made a pretty big move already. I'm actually not all that excited when I see this kind of price action. If you notice, so look at how this was sideways and then nice breakout, and notice how quiet the bars were. You see the size of these bars, and the movement was pretty orderly. Now look at the ratchety price action. I mean, this is really the volatility has gone way up in this stock. Now, it has good trend strength. We've got good trend strength in this. So if I'm long this stock, I want to stay long it. But I'm a little bit reluctant to want to play this right now until I see the volatility start to shrink a little bit. I just don't like playing when there's big swings like this and wild price movement bar by bar. So just something to keep in mind. If we look at the longer term picture though, I want to make sure I make this crystal clear. Look at this long sideways pattern and we're breaking out. Massive reading on the ATEX. If we can go through some type of a pullback or a consolidation or correction on this chart to get a little closer to the moving averages, I am definitely interested in this. I mean, I think there's more upside coming in this. I just don't like the near-term action in terms of the volatility, and I think it'll probably quiet down before it's ready to go. Nucor has made just a phenomenal move. We had this pullback to the 18-month line, and it took off like a rocket off of 50, and then and that was the pullback here on the weekly chart. And then we had another pullback to the 18-week, and had a very nice follow through off of that. Now we've gotten a little overdone, I think, in the near term. It just looks like it's ready to take a little bit of a longer breather now. It doesn't necessarily mean it's a huge negative. If I'm long this stock, I probably want to trail a stop, or I want to be doing some trimming if I haven't. If I haven't done any selling, I probably want to be doing that, and then I'd be trailing a stop below one of the moving averages or below the last swing low, something like that. But the trend is good. It's just overdone in the near term. SNOW. So, it's trying to turn the corner. Just can't get any real follow through, like it's making a higher move, but it doesn't get to the point where we see real strength. And what I mean by real strength is, look at the ADX. This is on the daily chart. So the stock has moved up. This was kind of like the breakout level, and we've moved up. But green DI can't even hold 25, and the ATX line is just going flat. We're not seeing any strength on the weekly side. So there's some signs of improvement here. What's bothering me is we're not seeing a lot of confirmation. And I think these dips, every time it makes a move up, there's sellers. Move up, kind of a reverse back, another move up, a reverse back. You're not getting any real follow through to the upside to be convincing. And so this might end up spending a little bit more time in a consolidation under 300, between 250 and 300 before it's really ready to get going. And this is something you want to evaluate in your stocks. If they're moving higher, we want to see green DI moving up. We want to see this ATX line turning to the upside. All right. If we don't have that, then you have to start questioning what's going on. MRNA, Moderna. So big, huge move. Pretty similar to some of the other names we've talked about. Look at the breakout pattern back here. And then we've got some volatility. I mean, this is a volatile movement. This is a volatile mover, no doubt about it. Big, huge swings all the time. Even when you're in a strong uptrend, you can see the volatility in the blue line and in the buyers. So we want to evaluate both the trend strength and the volatility. And I really do think ATX is helpful in those terms. But it's also helpful looking at the price action. You can see the size of these retracements. And then we get this surging market move and a big reversal bar here. So I personally be using this little rally back up to probably do some trimming in this as opposed to being a buyer, just because we've gotten so far away from the 18-week line after a big surging phase, went up and hit the 500 number. It's just a good spot for this to take a breather. And I would think the breather takes, somewhere in the area of 3 to 6 months. Let's look at APPS. Had a request about this and talking about last week's undercut and rally. And the viewer, I think, correctly suggested that this probably isn't going to be an undercut because the fact is that the way this is coming down is probably a little bit too hard. But we'd want to watch it. I mean, we are undercutting this prior low. We're right around the zero line. We have low ATX. Red DI hasn't crossed above 25. We're getting close to the 18-month line. So these are all things that have potential if this can turn up through, make a higher low or something like that, then yeah, it could be considered. The problem I've got is pretty good strength here on the daily chart. Look at the red DI breaking new highs. Look at the ATEX moving up to 34 and rising. So, I'm less inclined to believe that this is going to turn on a dime and turn up like a rocket, but we're in the area where you want to watch for that to take place. But look, if it doesn't happen, there's no harm in watching this. And then if it just keeps dropping, you never trade it. So I like to look at setups. So this is getting close to being potentially a setup if it can turn here. But if it never triggers, then we don't want to play it. So I look at a setup and a trigger as two different things. We're getting close to being set up, but if it never comes back up through and breaks and turns things around, then you never would play it. So that's why I keep a watch list. I like to see what's going on, but a lot of stocks on my watch list I never take action on. So RH has made a big run. We've gotten extended on the monthly chart, and it's really just kind of pausing up around this 700 area. You can see how it's tried to make a test or a move back up through there and hasn't really been able to get through. The MACD is showing a little bit of signs of tiring out. I like the longer term trend. We've got really a big strength in the momentum on both the monthly and the weekly. It's just overbought. It's just not a great time to be a buyer. If we break the 18 week, then we go into a correction phase, and this probably takes a couple months off. So just be aware of that if you're long this stock. I really would not be inclined to want to be a buyer, just how stretched it's been and the fact that we're starting to lose a little bit of momentum. Intuitive Surgical has been a great stock, continues to push higher. We're getting into this point now where we're extended above on the monthly chart, and now we're getting extended above on the weekly chart. I would actually consider looking at the daily and drawing in a trend line like this. And I'm okay with staying with the stock as long as it keeps abiding by this trend line. If it doesn't break the trend line, then just stick with it. I always like to scale out myself, so after a big run like this, I would probably be trimming it anyway or reducing the position, but it's not really doing anything wrong at a minimum until this trend line is broken. RYAM, so AM, I'm sorry, it's pulling back. We're getting this pullback to the 18-month line. Now, there is a problem here in that if we look at this pattern, we came to the 10 level and failed at it. And that's kind of a key area. That was really kind of where we broke down from. And the fact that we rallied up to that level and failed there tells me that there's still some issues up at 10. So I know up here I've got some issues. Now, I can still play this potentially for a turn, because I come into the 18-month line around 6, and then if I can get a turn, and I'd have to go down to the daily chart. I'd probably be looking for some kind of a break here, and then I'd play for a target up to 10. So just keep that in mind if you're thinking about playing this. We're looking for a few other things to take place. I mean, we've got MACD overrunning the zero line a little bit, so this is probably going to take a little bit more time. It probably does come down and touch the 18-month line, but we have to realize I think there is some resistance up above, and so we're playing for a set target on that one. COO on a weekly chart, if we just focus on this right now, we're making higher highs and higher lows. I like to buy the pullbacks towards the moving average complex. Even though this overran the 18, both lines were still essentially rising. So this might have been buyable. This was certainly buyable. Now we've gotten a little away. I would be more inclined to be holding this rather than buying it. But one key thing we want to look at is notice how ATEX is still below 25, even though we're making a higher high here. So we need to see, if we're getting real confirmation in this trend, the ATEX line should climb above 25. And actually, we want to see MACD climb above its, make a new high as well. But for me, I look at the ATEX in this fashion because if the ATEX doesn't climb above 25, then I'm starting to think that maybe there's something a lot more significant going on. And if we break the trend line, then we could be looking for not only just a pullback, but something a lot more significant to the downside. So I key off this ATX. When you're in an uptrend, and if ATX doesn't make it above 25, then I'm starting to watch price for signs of a turn or a distribution. And if that takes place, then I'm taking the divergence a lot more seriously when ATX can't get above 25. So just kind of keep that in mind. NTDOY, Nintendo. So we've gotten, let's go ahead and look at all 4 time frames. This is a little troubling here, what's taken place just in the last week. You see the break of the 18-month line and the fact that the MACD is crossing over from pretty far away. So when you break, the MACD crosses the signal line, it's not that big a deal unless you've made a pretty good move away from the zero line. When you do that, you tend to be a little bit more reluctant to want to dive right in. But even worse in this case, we're combining that MACD cross with a break of the 18-month. So I know I'm not in a big rush here. The question is this going to survive? We're coming back to a pretty big support area. This is where it broke out from right here. So we need to see a reaction. What I don't like is the negative DI on the weekly chart. That's a pretty good sign of selling strength right now. I would be in no rush to be a buyer in this for sure. I think this is going to take some time. And that's assuming this area is going to hold. If it doesn't hold, then there could be some downside risk in this. So definitely something to keep in mind, to watch this area right here in the high 50s. Let's look at Sony. Now this is much more orderly. I like what's going on here. If I'm playing chess, I'm starting to think a few moves in advance because I like the way you have the move to the upside with good ATX here. And we're starting to work our way back. We got really far away. Look at how far away this was from the 18-month. Now we're working our way closer. And it doesn't mean it has to come down to it. This goes up and this comes down and we work our way closer. And while we're doing that, we're getting this correction where the 18 is now below the 40 on the weekly chart, and the MACD has worked off the zero line. It was way extended from the zero line. Now it's back towards the zero line, and we have low ATX. So this is one that I'm watching now. I'm watching really closely. If this makes a lower low here and the RSI holds and makes a higher low, then that might be a sign of divergence, and we could play this a little more aggressively. If not, then I just want to sit here and draw on a trend line and wait for a turn to take place in this stock. We have run out of time. Here is my contact information. Please keep sending in those stock requests. Information down below, stocktalk@stockcharts.com, or in the comments area, you can plug in any symbols you want there as well. Have a great week, and we'll see you next time.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.